know, most of the major insurance carriers left the state. The State Farms, the Allstates, the Nationwides, a lot of the direct writers, and all of the major property casualty insurers left the state. They left the state principally because rates were rolled back, rates were frozen, and then they were frozen for 2 years, and then they were capped, going forward. So it created an environment, frankly, where the marketplace changed dramatically. So while the major carriers really represented 85–90% of the market 5 years ago, today the market is really driven by Florida domestic carriers. So 55–60% of the market at the end of 2013 will be written by either citizens or carriers in the Florida domestic marketplace. So the market here in Florida absolutely is Florida domestics. And the picture I like to paint is that things are getting better. I know they may not seem like they're getting better if you see a bill with an increase of 5, 10, 15, 20% in premium, but the climate in Florida is getting better. Reinsurance costs are dropping. They're dropping dramatically. They dropped 20% last year. They're dropping another 15–20% this year. What that's allowing the Florida domestic carriers to do is to buy far more reinsurance, which means they're far more stable. So the companies that, frankly, you should be concerned about, 2 years ago, are far more stable today. They have twice, maybe 3 times the level of reinsurance that Citizens has in place. So the Florida domestic carriers are solid, stable carriers, and they're getting stronger every day. Now, why am I saying that? I'm saying that because when I took over Citizens a little over a year ago, a year and 3 months ago, 17 days, 5 hours. When I took Citizens over, we had 1.5 million policyholders. And the approach at the time, frankly, was to try and do everything negative to move policyholders off the books, to reduce the assessment load. Bad decision. Bad decision. And it's a decision, frankly, that we've been recovering from, ever since. So what did we try to do? What we're trying to do is we must reduce the size of Citizens. It's ridiculous that a public company controls 26% of the marketplace. But what we need to do is do it in a way that benefits policyholders and benefits consumers. And that has been the intent. Jay has led the effort in these 2 areas for us to go back into markets we had previously exited. And in addition to that, the domestic carriers, as we come closer and closer and closer to rate adequacy, and we're almost there, by the way, in Broward County. We're only about 1% inadequate, and the rate increase that we're proposing for Broward this year is 5.5%, not 10%, but 5.5%. In Palm Beach County, it's 6.3, not 10, it's 6.3. We're getting closer and closer to rate adequacy. Now, what's happening? What's happening is that 1.5 million policies is now down to 1.2 million policies. And frankly, over 400,000 policies will be offered an opportunity to move in November, another 85,000 in December. And all I would suggest is when you get those offers, and I would say probably 50% of the people in this room will receive offers of coverage from the Florida domestic. I would just encourage you to look at a couple of things. Number one, Citizens made some very tough calls on coverage. So look at your coverage B, look at your coverage C, the contents, and look at the percentage of your contents. Make sure that the coverage that your independent agent is providing for you is solid coverage, and it meets your needs. Obviously, you have to look at the rate, but then you should also consider the assessment load. This is not a scare tactic, it is real. If a major storm hits, Citizens policyholders get hit with up to 45% assessment load. If you're not with Citizens and you're with one of the Florida domestics, you're capped at 2%. It can make a huge difference in the event, of a major storm. A lot of you will get offers for coverage. My belief is that by the end of the year, Citizens will be down well below 1 million policies on the way to the 800,000 level. So we're heading in the right direction. The market is improving. Companies are getting stronger financially. The picture is improving. And more people are moving into the private marketplace. And by the way, that, again, that's 60% of the market. 60% of the market. And I control 23, 24% today. So what does that tell you about the other traditional carriers? 20, 30%, you know, the other carriers are already making a place for themselves in the market. So those are my opening comments. I just wanted to let you know we are getting closer to where we need to be. We are getting closer. We have reduced the assessment potential unfunded liabilities from $10 billion 2 years ago. We'll end this year at $3.7 billion. And frankly, right now, we can take, you know, an Andrew-level storm and fund it out of surplus. A traditional company has to fund in the 1 in 100 level. We're not there yet. You know, I'm a good $4 or $5 billion away from being able to fund that. That's where we want to be ultimately, but we're on our way, and things are getting better, and the rate increases, you know, you will see, should be slowing down. There still are significant areas. If you live on the coast, obviously that is a much, much tougher, you know, issue. So, sorry to take so long, Senator, but we're more than happy to answer any questions from the Q&A. Thank you very much for this.
Actually, President, you can leave it there now. Everybody can hear me in the back. That's good.
Yes.
Very good. All right. Does anybody have any questions for anybody up here with regard to your insurance? And I don't want any speeches. That's hard to say in Delray, isn't it? I don't want any political speeches. What I'm interested in is specific questions. Sir.